everyone. I'm sorry I couldn't be with you today, but Joe has been kind enough to let me do my briefing digitally and through YouTube. So I'm glad I can at least share with you my briefing. As you can see in front of you, my company was LinkedIn. I'm sure it's a service that most of us use. I know I use it. I know a bunch of you use it. And in reports and on Wall Street, it's usually compared often with Facebook and Twitter. I understand why there's a tendency to do this because they're all social networks, but LinkedIn is a little bit different. So you could also look at some of its competitors as being sites like Monster.com or Glassdoor or Career Builder. So, when you're thinking about LinkedIn, you kind of have to think a little bit beyond the social media side of things and look at its functionality, which is one of the things that I think sets it apart from its traditional social media competition. But in any event, if you've been reading the news about LinkedIn and Facebook and Twitter lately, you probably know that they've taken quite a hit on Wall Street. Certainly not at the numbers that LinkedIn was at around this time last year or the projections. But I think that despite some of those numbers coming down, LinkedIn is better positioned to ride out whatever slump it is that we're seeing in the industry, in the tech industry on Wall Street, because it really has found ways to monetize its services and its platforms above and beyond what Facebook and Twitter have been able to do, mostly because Facebook and Twitter are focused primarily on advertising revenue. So with that being said, let's kind of get into the analysis here, and then I can come back up into why I suggested a hold, which you can see at the top. So like many of the companies in the internet space, LinkedIn's share price has declined. I think that part of the reason for this decline is that it's just a natural correction of overly bullish share prices of internet stocks in 2013. We kind of went through a series of wild IPOs and wild acquisitions, and I've been really skeptical about the faith that people have in Facebook and Twitter especially. I think LinkedIn gets lumped in on that, and I don't necessarily think it deserves to be, but I think what we are seeing in general is just a more realistic pricing of what these stocks are going to do moving forward. Some of LinkedIn's financials, LinkedIn's revenue has been strong. It's been growing. It's been growing pretty strongly over the course of the past year, but their profit margins have suffered, mostly because LinkedIn is growing so rapidly that the operational expenses they have in terms of setting up offices here in the U.S. and also abroad has put pressure on their profit margins, and also acquisitions that have to do with technology has put pressure on their margins. So even though their revenues are strong, in 2013 their margins even went below, their profit margin went below zero to negative 0.85 at one point, but then came back up to 0.85, and then I think it's hovered somewhere around 1%. So that's certainly something to be concerned about. But I think LinkedIn has a lot to offer. Of course, it is a bits business. It's built on its technology platforms, which are for the most part proprietary. LinkedIn has invested a ton of money in recent years into expanding the platforms to scale to the amount of members that they have been able to acquire. And you can see here in the briefing some of the numbers. I mean, they spent, $395 million on the IT platforms in 2013, and that was a jump from pretty high numbers in the years prior. Recently, LinkedIn also acquired Bright. This is a pretty cool move. Bright was a company that specializes in data and search. LinkedIn's hope is that the technology that Bright brings to the table will allow them to better service both their users and their company customers, because they specialize in search and data, and they're going to help LinkedIn mine their data to better connect employers with would-be talent. From a user perspective, you all use it. You can come to your own opinions about how you feel about certain areas of this site. They've updated the ability of profiles to share rich media lately. I think that's pretty neat. So if you're building your resume on LinkedIn, you can now upload a presentation that you've done, or a video, or a book that you've published. These are all the things that help us, kind of build your online professional profile, and it does set LinkedIn apart from sites like Career Builder or sites like Monster.com. Um, LinkedIn is also has a wide array of APIs available to help integrate their content and widgets for personal and professional websites. If you go to a blog, you can see, there are share buttons to share content on LinkedIn, but at the same time, there are also buttons for LinkedIn content to come onto your website. In fact, on my website, we have a whole section that shows our LinkedIn company profile on it. But that being said, even though LinkedIn is a pretty cool technology company, it's certainly not without its challenges. They're particularly concerned about slow load times. Slow load times not only frustrate the end user, but they also hurt your search results. It kind of hurts your results in Google. And if you use LinkedIn, you probably know that it's one of the first things to show up in Google when someone searches your name. They rely on that search engine optimization is part of the offering to their user base. So that's a concern. The other thing that I've personally noticed with LinkedIn is that their mobile app is really clunky. It's slow. It has odd notifications that don't go away. It's pretty frustrating to use. It only gets 3.5 stars on average on Apple's operating system. It hurts my user experience. I'm sure other people feel the same way. I think this is kind of shocking considering that LinkedIn is a technology company. They should be able to master their mobile app, but at the same time, the depth and breadth of LinkedIn's database and technology is probably what's creating some of those quirks, and I'm sure that they're going to invest money in trying to make the mobile app experience better for users. So speaking of users, we can talk a little bit about customers. I think this is what really sets LinkedIn apart from their competition, and it's the reason why I think they're better positioned than Facebook and Twitter to perform in the markets. LinkedIn initially was a one-sided market. So it was free to users who wanted to set up a profile, and it was corporate entities that paid to access that database. And so in the beginning, LinkedIn focused, kind of how we have in our games, on getting the most users as possible so that companies would want to pay them for the network. As LinkedIn has grown successfully and has been able to capitalize on those network effects, they've been able to now charge users as well, or provide services that users are willing to pay for. And I would say LinkedIn is now effectively a two-sided market. You have free users that are now willing to upgrade to paid services in order to access LinkedIn's database of companies and also the network in general. And you also have those companies that are still willing to pay LinkedIn for the access to the users. So LinkedIn really services two companies now, in addition to its non-paying members. I'm sorry, three customers now, in addition to its non-paying members. They service companies that are looking to tap the network for talent. So that's their talent solutions business line. That's what connects employers with possible talent. They have advertising, just like Facebook and Twitter. They do have corporate packages for advertising. They call it their marketing solutions business line. And finally, they have special features that members can pay to upgrade for a premium subscription. I actually have one. You can see a lot of the things like the people who have been looking at your profile, or you can contact people out of network, and there's a whole lot of features there. The talent solutions business brings in the most revenue, but the other areas are growing pretty rapidly. LinkedIn is really focusing on its international customer base. I think I saw a statistic that said 66% of its users are actually international at this point. So LinkedIn is really pushing that international expansion. And in fact, when some of us were in Dubai and Abu Dhabi, we saw the LinkedIn buildings in Internet City in Dubai, and it was just an indication that LinkedIn's trying to push into the Middle East as well as Asia and other areas of the world. They are focusing specifically on China. They think that that's going to be their biggest pocket for growth, and I mean, that remains to be determined, but they are going to be investing in web pages in Chinese to kind of start to corner that market. Right now in the US, LinkedIn is ranked 7th on Alexa, and it's ranked 8th globally. So again, top 10 website in the world. Operationally, I struggled with this a little bit because it's a bits business. So the operations are really geared around Office and Salesforce and, just kind of all the expenses that come with rapid growth, mostly in terms of talent and, of course, its focus on technology and growing its technology capabilities, and of course keeping its systems running. Because LinkedIn has grown so rapidly, the operational expenses have been really high, and this is reflected in its margins, which I discussed earlier. I think as LinkedIn, continues to expand internationally, you're going to see more expenditures here. I think as things maybe level out a little bit, some of those expenses may start to go down, and maybe margins will have a better opportunity in the future. So, I mean, overall, LinkedIn has some good prospects. I mean, they have 3 customer segments that they can monetize. Those business units are growing year over year. You can just see the numbers in the prospects graph. I won't read them off to you, but they're pretty significant growth, and the 53% on their talent solutions is pretty good. I think that LinkedIn's acquisition of Bright will help enhance its networks and hopefully make the user experience a little bit better for both the users and the companies. And of course, there is speculation over people in China if people in China will want to use LinkedIn. But I think when you think about globalization and the way that talent and employers connect with each other, I think it's inevitable, and I think there are opportunities for LinkedIn to grow in China. And if that's the case, that should really drive revenue growth. LinkedIn has put out some projections. They're expected to grow about 34%, which is less than last year, but I don't think that that's very stalled. So with all of that being said, there's been a lot of conversation on Wall Street about whether or not to buy LinkedIn in the dip or to hold. My recommendation would be to hold, and it's solely because I think that the numbers that LinkedIn and the other internet companies saw months ago were overly inflated. So even though I think LinkedIn is going to grow, I'm not entirely sure how much it's going to grow, and I would maybe take a more conservative approach and see what happens in the next few months. They only acquired Bright in February, I think, so they have some time to kind of see how that relationship is going to work out. So yeah, I would hold the stock right now. I'd keep an eye on it, and that's my recommendation. If anybody has any questions or anybody wants to talk about it, please feel free to shoot me an email, give me a call, or I'll talk to you in class next time. Thanks again, and I'm sorry I can't be there with you, but have an awesome Friday, and I'll see you in a few weeks.